Guys, this is S&P 500 weekly technical analysis for the week of November 7th, 2022. That is from November 7th, Monday to November 11th, Friday. So, what I have mentioned in my previous S&P 500 weekly technical analysis that because there was a very high or very heavy manipulated movement in the Dow Jones. See, it was the Dow Jones that these the market movers they have manipulated. Okay, it was not the S&P 500 and not this the Nasdaq. So they have manipulated the Dow Jones. Okay, last week when the big ones have posted their earnings. Okay, so I have informed you very well in advance that we are going to see very heavy volatility, and that is the reason. Okay, we can see some very heavy movement, unexpected movements against the technicals very easily. Okay, against all theories or these are principles. Now, in my previous weekly technical analysis of the S&P 500, I have told you that whenever the Dow moves up and whenever it hits the 33,050, approximately 33,050, then it will hit its 78.6% of the Fibonacci retracement. And also, other than that, the most important part that this zone, this particular zone, okay, you are seeing in this the background, this was the very strong confluence zone. So I told you that it will not be easy, even with the manipulators, okay, or even with the manipulated movement, it will not be easy for the market manipulators to breach this particular zone. So whenever it hits around 33050, then most likely we are going to see a downward movement or these are red candles. Now this is the chart of the Dow Jones. Now if you notice that this was Monday, this was Tuesday. On Tuesday the high was 32975 and on Wednesday the high was 33070. And what I told you 33050, approximately 33050. This was the high, and then there was the heavy candles, and then on this the last day, this the last Friday, okay, a reversal, but that again closed below, okay, these the levels. So that translates in the S&P 500 as what? That translates to this S&P 500 as the high was 3911, okay, and then it came down. So I told my YouTube community members that see we have 50% fib retracement of the in case of S&P 500 at 3907. This means that most likely the S&P 500 is expected to remain below 3907 because by the time S&P 500 hits the 3907 or around 3907, the Dow Jones will be hitting its 33050. So these two events are going to happen at the same time. That is the reason when, so means just a bit up down, okay, that's not a problem. But that is the reason, okay, we can see the downward movement. And then you can see that on Tuesday, okay, on this, the previous Tuesday, you can see that it came down and it came down heavily. Now on Tuesday, in case of S&P 500, we knew the shape of the candle, that what is going to happen and how it is going to happen. And if you notice, this was my YouTube community update to my YouTube community members, okay, on November 1st. So I told them that the possibility is that because we have seen a green candle, we have seen a small red candle, so we are going to see a heavy red candle, or we are seeing a green candle, then a red candle that was there on Monday, okay, then now we can see a red, most likely a red, okay, else there will be a small green, and then on Wednesday the S&P 500 and the entire stock market will give you this the movement. So this condition number one, this the first condition, okay, it was, so this condition was fulfilled. And if you notice in the chart, so the condition was this one, okay, so we have these three candles. This was heavy up, this was hold, and then this was a red candle. Now because of this the very heavy movement on this the Wednesday, so I have informed my YouTube community members, okay, this was update on the movement, told my YouTube community members that closing of the market means the stock market and that on and all of these indices, okay, Dow Jones, S&P 500 or the Nasdaq. Closing of the market irrespective of any level simply indicates we are going to see either a gap down open or irrespective of open, it will come down on the next day. And what was the next day? The next day was this day. Now you can clearly see that I told them that irrespective of any closing on Thursday, we are going to see a gap down open, and or irrespective of open, we are going to see a downward movement. So what has happened? First a gap down open and then it came down. Later we have seen a reversal, but again it came down. So that was something that I predicted one day before the open of the entire stock market, that what is going to happen the next day. Now guys, let's discuss the agenda of this, the S&P 500 weekly technical analysis, that is from November 7th Monday to November 11th Friday. Now if you see that, first I'm going to discuss the S&P 500 technical analysis on the weekly chart, and I will tell you that, and I will show you, not just tell you, but I will show you that there was a rejection, on this the weekly chart of the S&P 500. Okay, and again, once again, okay, why we look into this the weekly chart? Weekly chart is the hawk eye view. Okay, we look into the trend, that what is the trend of the S&P 500, what is the trend of the entire stock market, okay, and the Dow Jones and this the Nasdaq. So the weekly chart will give us the trend and the hawk eye view, what is happening, what is going to happen, and how it is going to happen in the coming days, weeks, or months. Then point number 2 is the FOMC minutes, Federal Reserve Chairman comments, and the election. So I will discuss these. Okay, that what was there in this the FOMC minutes. Okay, then the comments of the Federal Reserve Chairman. Okay, that what he has discussed. Okay, and what the reporters have asked him. Okay, and how he has reacted to this the news. Okay, and based on his comments, okay, what we can expect in this the near future, that what will be the direction of the stock market, what will be the direction, okay, of this the S&P 500 in near future. And see, and guys, because he is the Federal Reserve Chairman, right? So whatever he says, okay, it doesn't just impact this only these the S&P 500 or any of the index, okay, or the stock market itself, but its impact is also seen on this the economy. Okay, and not just the US economy, but on this the global economy, we can see this the impact very, very clearly. Okay, so that is there, the FOMC minutes, Federal Reserve Chairman's comments, and the election. Yes, so we have the elections in this the coming week. Okay, so I will discuss these the elections, and how based on the elections, okay, we should be ready to see some speculation. Okay, and because there will be speculation, so there will be manipulation. Okay, as simple as that. Then comes the next point. Okay, that is the point number 3. I will discuss the S&P 500 support and resistance levels. I will give you the support and resistance levels. And see guys, if you have subscribed to my channel, then you know that whatever the support and resistance levels I give you, okay, these are very, very sensitive. Means whenever the S&P 500 moves around or at, okay, these the levels, then something happens. Then I will give you the S&P 500 technical analysis on the daily chart. I will tell you that how the S&P 500 is expected to behave, okay, on this the daily chart, and what the technical indicators on the daily chart are saying about this S&P 500. Then finally, I will give you the probable movement of the S&P 500 from November 7th to November 8th. Okay, so I will tell you that how the S&P 500 is going to behave from November 7th, that is Monday, to November 11th, Friday. So guys, before I begin, I want to clear this thing, that this technical analysis is not a financial advice of any kind, in any form or in any manner. Secondly, this S&P 500 technical analysis is not an advice on any kind of trade setups. Now, the last but not least, that whether you are seeing 100% profits within a day or you are seeing 50% losses within a day, all of these profits and losses are all yours, because I do not know that how you are going to interpret my S&P 500 technical analysis. Now guys, I'm going to begin with this the first point of our agenda, that is the S&P 500 technical analysis on the weekly chart, and I will tell you about this the rejection. Okay guys, so this is the weekly chart of the S&P 500, and this is the first point of our agenda. In this, the S&P 500 weekly technical analysis. So let me write it down, weekly chart. Okay, W as in weekly. So when I say the weekly chart, I mean that one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay. Now, if you notice that, okay, first comes this the candle. If you notice this the candle, this is a bear candle. This is a bear candle, a red candle, or a heavy red candle. Now guys, the other important part in this S&P 500 technical analysis, means on this S&P 500 weekly chart, is that if you notice that these two candles, these the last two candles, okay, these two candles, they try to move up to where or to what level? Okay, so this was 3907. So these two candles try to move up, okay, or beyond 3907, or try to breach this the 3907, but ultimately there was a rejection. These two candles have failed. So this is like two consecutive rejections from the zone of from this the level, okay, from the level itself, from the level that is 3907. Okay, so this what it indicates? It indicates that now there are heavy bearish sentiments. Now guys, let's talk about the technicals. So technicals, okay, the first comes this is the Bollinger Bands. If you notice, this is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed in between the lower band and the median of the Bollinger Band, this means that the S&P 500 on the weekly chart is bearish through the Bollinger Bands. As simple as that. Then comes this is the second thing. The second thing is this the moving averages. Now, last week there was some confusion. Okay, last week the moving averages were neutral for the S&P 500, but this week again the S&P 500, okay, it has come down and now it is giving us a movement, okay, or an indication. You notice that all of these are moving averages. There is a clear fan out supporting the bear trend. The second thing is that the closing of this candle is below these the moving averages, means all of these the moving averages, and that is the reason, okay, these through these the moving averages the S&P 500 is bearish. Now comes the next technical indicator, and this is the Ichimoku cloud. If you notice that the S&P 500, okay, it has closed below the Ichimoku cloud, this means that the S&P 500 is bearish through the Ichimoku. So S&P 500 is bearish through the Bollinger Bands. S&P 500 is bearish through the moving averages. S&P 500 is bearish through the Ichimoku. Now let's see that what other thing is happening, okay, or what it is happening. Now if you notice that the MACD was trying to cross over the signal in this week. However, it failed. It failed only by $2. Sorry, not $2, but only by approximately 2 points. Only by approximately 2 points, okay, it failed. So the MACD is still bearish. Secondly, the MACD and the signal both are negative. Okay, so this means that the MACD is heavily bearish. So now the MACD is bearish because MACD is less than the signal. Okay, just like as it was in the previous week. Okay. Now comes the stochastic RSI. Now surprisingly, it is only and only the stochastic RSI that is bullish in case of the S&P 500. It is the only bullish technical in case of the S&P 500. Otherwise, all other technicals are saying that the S&P 500 is bearish on the weekly chart. So what it indicates? It indicates that because, okay, so other than that, we have the divergence indicator. Divergence is normal. Then we have the volatility. Volatility is still trading at all-time high levels. So what it indicates? It indicates that 80% of the technicals, 80 to 85% of the technicals are saying that the S&P 500 is bearish. This means that now the S&P 500 on the weekly chart is bearish. S&P 500 on the weekly chart is bearish. So I'm not saying heavily bearish. I will say heavily bearish. Okay, once this the stochastic RSI, okay, it also becomes bearish, then I will say heavily bearish or absolute bearish, right? So as of now, on the weekly chart of the S&P 500, the S&P 500 is clearly bearish. Now guys, let's move on to the second point of our agenda, and the second point of our agenda is the FOMC minutes, Federal Reserve Chairman's comment, and the analysis of this, the comments of the Federal Reserve Chairman and the FOMC minutes, and its impact on the stock market and the economy. And other than that, the elections. Okay, election means the speculation and the manipulation. So guys, once again, if you have not subscribed to my channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community to get the daily analysis of the S&P 500, then I've given the link in the description of the video and also in the comment section. So guys, now let's discuss the second point of our agenda, that is the FOMC minutes, Federal Reserve Chairman's comment, and the economy and the elections. So this was the update, okay, that I gave to my YouTube community members immediately, okay, after this the press conference was over or about to over. But before that, in my pre-market update on the same day, I've informed my members that from 1:30 p.m. onwards, the volatility will start to increase, and then at 2 p.m. Eastern time, we can see some movements based on the FOMC minutes. However, the market is not expected. Market means the stock market. It is not expected or to react to the FOMC as such, because the market, the stock market, and this the S&P 500 will wait for the press conference, because it is the press conference that can drive the stock market crazy, that can drive the S&P 500 crazy. So other than that, okay, I have mentioned that that one thing is certain, that the Feds will raise the interest rates by 75 bps. So this is what we knew, okay, very well in advance, even before the Fed chairman has confirmed. Okay, this is the same thing. So guys, these were the things, okay, we knew very well in advance, even before the FOMC minutes or before this the press conference, that what is going to happen, okay, and how it is going to happen. Now, the first thing was that, okay, I mentioned in my these are notes to my YouTube community members, that it was unexpected, but it has happened that the Fed chairman today did not play by the rules of the market movers. Rather, he acknowledged that the problem is much bigger and cannot be ignored as such. So earlier, what used to happen is that the Fed chairman, okay, he used to comment something, okay, that that can trigger, some this is the upward, this is the movement, okay, even though he is not saying, okay, this thing directly, okay, but based on these the some comments, okay, that we can at one point of time, okay, we can think about this the slowing down, okay, means some of these the comments, okay. So the market manipulators, okay, they used to took these comments like the positive comments, right? But what has happened in the recent this the FOMC minutes and the press conference is that he, okay, the very first time he has expected that there is a problem, and he is not going to say that there will be an instant relief or an immediate relief, right? Now, the other point or the other part that the Fed chairman has confirmed, okay, about this, this thing, that he has confirmed that no pause and no loosening, okay, and there will be further rate hikes. So what has happened is that many reporters, okay, were asking that if the Feds are going too aggressive, okay. The Fed chairman commented that no, it is not too aggressive, and it is not an aggressive, okay, the rate hike. However, everything is as per their plan, okay, and still there is some scope that the Feds can raise, okay, these the interest rates, right? Now comes that the next point, that he has also confirmed and acknowledged that the economic activities have slowed down. Okay, so this was the very first time, okay, he has acknowledged this fact, that the economic activities have slowed down, not just in the US but globally. Economic activities are slowing down, means the economy is slowing down. When the economy slows down, then what happens? Recession. Okay, because that is the time when the recession happens, when the economy slows down. Okay, and he has said that the more impact will be soon, that more impact, okay, of this the global economic activities, okay, it will be seen soon. However, the tightening is not yet enough to curb the inflation down. Okay, this means that further rate hikes are needed, and definitely there will be further rate hikes, right? Now comes, okay, this thing, that he was happy as well as worried about the labor market. Okay, so he was saying that the labor market, okay, it is good and strong, people are still getting the jobs, okay, and because the economy is slowing down, okay, so this thing is inevitable that sooner or later the labor market will see the heat, okay, of this the slowdown of this the economy, the global economy. Now, the best part of this the press conference was, what was the best part? The best part of this the press conference was that he was asked again and again the same question. Okay, and see, what I think and what I feel based on the questions that were asked, that someone have asked these reporters to ask these questions, okay, specifically, okay, with and emphasize on this question that when will there be this, okay, this the rate these the rate cuts, and when will there be, okay, this the pause in the interest rates, okay, high, etc. Okay, so these two or three reporters have asked him, okay, through different methods, okay, that when means if the Federal Reserve Chairman has any commitment or any number that he can, tell that when exactly, okay, he is going to stop these the rate hikes. Secondly, what will be this the size of, okay, of these the hikes, whether 75 bps or the 50 bps. However, this time, okay, the very first time, the Fed chairman, okay, he avoided these questions and he has simply said that no pause in the rate hikes, there will be rate hikes. And as of now, he cannot comment on the size because the situation is not coming under the control and things are not as they were expected to be. Right. So this was, okay, with this the Fed chairman, okay, comment, and Fed chairman's comment, okay, was in line with the FOMC minutes, whatever was there, okay, in that the document, okay, so it was there. Now, the next part is the impact on the global economy and the elections. Okay, so first the impact. Because the Fed chairman has said that the Federal Reserve is going to raise the interest rates further. See, what is the purpose of raising the interest rates? Again, if you have subscribed to my channel or if you are my YouTube community member, okay, then I've told you many times that the purpose of raising the interest rates is to slow down the economy, willingly to slow down the economy. Okay, other, so there is, this the other way, okay, to slow down the economy, and that is when the Federal Reserve, okay, stops printing money, when the Federal Reserve, okay, this restricts the supply of money in the open market. Okay, and this way, okay, Federal Reserve, okay, and other than that, okay, the Federal Reserve, sorry, the government can charge, some taxes. So that is another way, okay, to slow down the economy. But this time the Federal Reserve, okay, has planned to slow down the economy by raising the interest rates. Simple. Because when the interest rates rises, okay, in that case, what happens? In that case, your loan, any kind of loan or every kind of loan will get costlier because the loans will be costlier. So recently we have seen that the pending home sales, okay, this the report, it said that the pending home sales, okay, it fell by more than 10%, okay, or approximately 10%. Okay, because people are not buying the because as of now people are trying to avoid buying the homes because of this the interest rates, because in order to buy a home, in order to buy a house, you need the loan. Okay, and when you go for the loan, then you have to pay, okay, more interest on that loan because the Federal Reserve has raised the interest rate. So what will happen? Again, the Federal Reserve will charge, okay, the Federal Reserve will charge this interest, okay, from the banks. Okay, so as of now, let's say Federal Reserve is charging 4% from the banks. So the banks will charge like 6% from the customers. 6% from the customers. Now the banks will keep 2% and will pass 4% to the Federal Reserve. As simple as that. Okay, this is how the economy works. Now, because people are not going to opt for the loan, okay, because they know that the interest rates are costlier. Okay, so this means that now the purpose of this, okay, there is the Federal Reserve. Okay, it is now the purpose is saying, okay, that it is getting fulfilled because the economy is slowing down. As simple as that. Okay, because people are not buying the things, people are not taking the loans, okay, etc. Means the global economy. Now, whatever happens in the US, whatever the Federal Reserve decides, okay, its impact is clearly seen on the global economy, okay, on other countries. Now let's talk about the elections. Okay, on 8th, on November 8th, that is Tuesday, okay, the elections will be held. As of now, we know the Senate, okay, and the Congress. So okay, there will be the elections. Now, whenever the elections happen, then what happens is that the speculation increases. Now, many of these the poll analysts, okay, many of these the news channels, okay, they will publish these are different numbers. This is going to happen or that is going to happen. So the speculation will increase. Okay. Other than that, the market movers, they have their own influencers, okay, to influence the market, okay, the stock market. So again, the speculation will increase. Now, whenever the speculation increases or whenever the speculation moves up, then what happens is that the market manipulators, they comes into the picture and then they take advantage of this speculation, because now they are going to take the advantage of this the speculation. This means that now the stock market, means in our case it will be S&P 500, it will be entirely in their hands that how they want to drive it, whether they want to drive it upside or downside, or whether they are going to keep it like this, means the sideways. So it depends on the market movers, how they will plan for these the things. This is something that we are going to talk about in the probable movement of the S&P 500. So this the second point, and now guys, we will move on to this the third point of our agenda. And the third point of our agenda is this the support and resistance levels for the S&P 500. Now guys, we are going to discuss the third point of our agenda, and the third point of our agenda is the support and resistance levels. So guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community in order to get the daily analysis of the S&P 500, then I have given the link in the description of the video and also in the comment section. Now, if you notice that earlier what has happened is this, the 3840. 3840. Okay. There was a lot of this the movement around 3840. First it moved up, then it came down, then it moved up, then again it came down. So this 3840, it is a very strong support as well as resistance. Now comes this one. Okay, this, if you notice that there is a lot of activity in this the zone of 3630. This is what this is, 3630. Again, 3630 is going to act as very strong support as well as resistance. We also have this one. This one is the 3635. 3635. So in the coming week, see, because the elections are there, this means the speculation will be high. Because the speculation will be high, also there will be some manipulation. Below 4035, we also have 3990. Okay. So see, however, the chances of seeing the S&P 500 hitting 3935, 3990, are thin, because the first S&P 500 has to struggle, in this the zone of 3840. Then it has 3884. Again, there was a lot of struggle at 3884. So back to back, there are two confluence zones or two heavy resistances. Okay, but even if like for 1%, because the speculation will be there because of the election, then manipulation will be there. Okay, then the technicals. Okay. So let's keep it like 3937 or 3935, and then 3990. That's it. So we have 3990 resistance, very strong resistance, very good resistance. Then we have 3937, very good resistance. Then we have 3884. Recently the S&P 500 has struggled a lot in the zone of 3884. Again a good resistance or heavy resistance. Then we have 3840 itself, a very heavy resistance, very strong resistance. Back to back 3840 and 3884. Back to back. Then we have an immediate resistance at 3791. So this was the second update that I gave to my YouTube community members, and I told them that technically what was supposed to happen, technically S&P 500 was not supposed to go beyond 3790. Just a little bit up and down. That's okay. But it was technically on Friday, S&P 500 was not supposed to go beyond or go above 3790. But initially, in this the first hour, there was a very heavy retrace. So it looked like that it can move up to 3805, like 15 points from 3790. That's it. But the S&P 500, it moved to a maximum of 3795, and then it came down. So on Friday, initially, initially means after 1 hour, it has respected the technicals. It moved up to 3795, and then it came down. And then it came down to what? Then it came down to 3710, I guess. So as of now, we have 3790. Again, 3790. It is a very good resistance, And earlier, if you notice that it was a 3790. After rejecting or after getting a rejection from the 3790, the S&P 500 came down to 3500. Right? So do not forget this part. Now, so 3790 is going to act as a very strong resistance, very good resistance. Then we have 3735, again a very good support, because S&P 500 has closed above 3735. Then we have 3675. Okay, now see 3675, there was a lot of movement in the 3675. This means that whenever S&P 500 comes down, then it is expected to hold. Okay, see, if not for 1, 2 or 3 days, then it should be expected to hold at least for a couple of hours in the zone of 3675. Okay, because of the earlier movement. Then immediately okay, after 3675, then we have 3630. We have 3675, then we have 3630. Okay, now below 3630, then we have 3585. Okay, a very good support. Then we have 3565, and then we have 3527. Okay, so 3527 was actually the level from where the manipulation, okay, it was seen in the S&P 500, coming down from 3770 to this 3500. This is like 7% drop. So 7% drop within a week is normal. Okay, so as of now, let's keep it up to 3500. Okay, 3500. So from 3990 to 3500 in the coming week. So guys, these are the support and resistance levels. Okay, now we are going to talk about the fourth point of our agenda, and the fourth point of our agenda is the S&P 500 technical analysis on the daily chart. Now we know that on the weekly chart, the S&P 500, it was bearish. Now let's see what is happening on the daily chart. Because of these heavy candles, okay, these 3 or 4 candles, there is some change. There is some change in the S&P 500. Guys, now we are going to discuss the fourth point of our agenda of this S&P 500 weekly technical analysis. And the agenda is the S&P 500 technical analysis on the daily chart. So guys, before I do the technical analysis on the daily chart of S&P 500, I have this information to share with you, that if you want to get the daily updates of the S&P 500, the daily analysis of the S&P 500, to trade in the stock market, to trade in the S&P 500, then you can join my YouTube community. So in order to join my YouTube community, I have given the link in the description of the video and in the comment section. So when you click on that link, then you will see this page. This is my YouTube channel page. So when you click on the join button, this is the join button. So when you click on the join button, so once you have clicked on the join button, then this pop-up will open. Now in this pop-up, you will see that we have 2 options only, one midweek update and all midweek updates. So what is this, the midweek update? Midweek update means the daily analysis of the S&P 500. This means that if you opt for only one midweek update, means you will get the daily analysis of the S&P 500 only on Monday, every Monday. And if you opt for the all midweek updates, means you will get the daily analysis of the S&P 500 from Monday to Friday, each and everything from Monday to Friday. All of these the updates, all of the analysis of the S&P 500 on the daily basis from Monday to Friday, if you opt for all midweek updates. And guys, if you notice that most of my members, 97-98% of my members, they have opted for all midweek updates. Means they are getting the daily analysis of the S&P 500 from Monday to Friday, each and everything from Monday to Friday. So guys, whenever you want to join my YouTube community, I have given the link in the description of the video and also in the comment section. You are welcome. And guys, one more thing, that once you have joined my YouTube community, then you have to visit my channel and click on the community tab. And all of the updates will be there in the community tab only. And other than that, if you are using the YouTube app, in that app, okay, you can choose the community section, and you will get all of these updates in your mobile phone. Now guys, let's discuss the fourth point of our agenda, and the fourth point is the S&P 500 technical analysis on the daily chart. Now in the S&P 500 technical analysis, okay, so the first thing is the Bollinger Bands. If you notice, this is the upper band of the Bollinger Band, and this is the lower band, sorry, this is the median of the Bollinger Band. And because the S&P 500 has closed in between the median of the Bollinger Band and the upper band, this means the S&P 500 is bullish through the Bollinger Bands, right? Now comes the second part, or this is the second technical indicators. Okay, this is the moving averages. If you notice that there is still no fan out, no clear fan out in these 3 of the moving averages, right? Other than that, the most important part, if you notice that the closing of the S&P 500 was below all of these the moving averages, this means that either the moving averages are bearish or neutral, but the moving averages are not bullish. Either the moving averages are bearish or neutral, but moving averages are not bullish, because the closing of the S&P 500 was below all of these the moving averages. Secondly, there is no clear fan out in 3 of the moving averages, right? Now comes this the third technical indicator, and that is the Ichimoku. If you look into the Ichimoku, the S&P 500 has closed below the Ichimoku cloud. This means that the S&P 500 through Ichimoku is bearish. What we have seen is that the Bollinger Band S&P 500 is bullish. Through the moving averages, either it is bearish or it is neutral. Through the Ichimoku cloud, the S&P 500 is bearish. Now these are the other technical indicators. Now if you notice that the MACD is barely bullish. So during the session, okay, at one point of time, it was like almost confirmed. So when the S&P 500 was below, okay, or was trading around this like 3,810, sorry, 3,710. So at that point of time, okay, it was very close to cross below this the signal, okay, and then it would have become the bearish, okay. Now, as of now, the MACD is just above the signal. This means that directionally MACD is bullish. However, the second part is that the MACD is positive and the signal is negative. Because the MACD is positive, signal is negative. So as of now, we cannot say that MACD is absolute bullish or absolute bearish. Okay. So it is just directionally bullish or it is just barely bullish. Okay. It is not supported by the signal. Now, this is the important thing, that if on Monday, if we see any upward movement, in that case, we can expect the MACD, we can expect the signal to be positive. Okay, to be positive. However, if there comes a downward movement, okay, or there's a bear candle, in that case, the MACD will cross below the signal and it will become bearish. So on Monday, either both of these will be positive, MACD and the signal, or both of these will be negative, MACD and and the signal on Monday. So as of now, directionally MACD is bullish. This means that the S&P 500 is bullish through the MACD. Now comes the stochastic RSI. If you notice that the K channel is less than the D channel, both are below 50, stochastic RSI clearly bearish on the daily chart of the S&P 500. Then comes the divergence. Now if you notice the divergence, so divergence is normal, okay, not a problem. So this divergence is in the closing prices of the candles. So this is normal, okay. Other than that, we have the volatility. So the volatility, okay, it is normal. So earlier, okay, it was moving up and it was high. Okay, now then it came down and now it is coming down. Okay, but again, it is 82.99. So it is like you can say 90%, 89 to 90% of the all-time high volatility levels. Okay, so guys, as of now, what we can conclude is that we have these three technical indicators. So S&P 500 is bullish through the Bollinger Band. S&P 500 is neutral or bearish through the moving averages. S&P 500 is bearish through the Ichimoku cloud. S&P 500 is bullish through the MACD. S&P 500 is bearish through the stochastic RSI. This means that overall S&P 500 is neutral on the daily chart, and now the S&P 500 is looking for its direction. So guys, now we have seen, okay, that the S&P 500 is looking for its direction, and most probably next week, okay, S&P 500 is going to get the direction, because there are two reasons. Number one is that the elections, okay, Tuesday, election day, okay, so there will be speculation, there will be manipulation, okay. On the 10th of November, the CPI data will be out, the CPI data, okay. Now, even so, for example, okay, if the S&P 500 and the entire stock market, if the stock market and the S&P 500, okay, did not get any clear direction, okay, by 9th of November, by this Wednesday, in that case, the 10th of November comes into the picture. On 10th of November itself, and thereafter, the S&P 500, either it will move up or it will move down. As simple as that, because the CPI data will decide the fate of the stock market. So guys, once again, if you have not subscribed to the channel, then please subscribe the channel. And if you want to join my YouTube community in order to get the daily analysis of the S&P 500, then I've given the link in the description and also in the comment section. So let's move on to the fifth point of our agenda. And the fifth point of our agenda is the S&P 500. This is the probable movement of the S&P 500. Now guys, we are going to discuss the fifth point of our agenda, and the fifth point of our agenda is the probable movement of the S&P 500 in the coming week. Okay, that is for the week of November 7th. Now, so at first, okay, again, you need to know these are two things. Number one is the election, okay, on 8th of November, that is Tuesday. Number two is the CPI data. So CPI data, okay, it will be out at 8:30 a.m. Eastern time on 10th of November. This will be on 10th of November. So 10th of November will be Thursday. And election, okay, it is on 8th of November. 8th of November is Tuesday. Now, other than that, okay, what you need to know is that the Federal Reserve Chairman has confirmed that he is not sure or he cannot confirm whether the CPI data will be more or less, because as of now everything looks uncertain. Okay. Other than that, if you look into this the recent PMI data, then the recent PMI data, okay, it has further confirmed that the manufacturing is slowing down. Okay, the manufacturing sector, it is slowing down. Even though that the manufacturing sector is slowing down, the inflation is moving up. Okay, so because earlier we have seen the PCE data. So PCE data has confirmed that the inflation is moving up. This means that most likely the CPI data, okay, it will be on and around the previous one. So the previous CPI data, it was 8.2. Last month it was 8.2 CPI inflation. Okay, this month it is again expected to be around 8.2. Okay, or more than 8.2. And this is the same thing that the Federal Reserve chairman, okay, he has said that he is uncertain, because when the reporters asked him that how certain or how sure he is or how confident he is that the inflation will come down, okay, from this the coming month, so he said that he cannot comment on this part because he is uncertain, because even after raising the interest rates, the inflation is not coming under control. Okay, and looks like that we are like or means something like stagflation, or in some countries we have seen that the hyperinflation. So what the Feds they are trying to do, they are trying to avoid this the hyperinflation. The Bank of England has confirmed that the UK economy is in a long-term recession. Already the UK economy is in a long-term recession. Long-term recession means for next 2 to 3 years, the UK economy and the European economy will be in the recession. Why we have seen, okay, this is the very heavy upward movement. Before every crash, we have seen that the market manipulators came and they moved up the entire stock market, the S&P 500, Dow Jones, Nasdaq, all of the stocks, okay, for a few days, okay, or for like 2 weeks, okay, or on and around 2 weeks or so. They moved up everything and then they asked everyone to participate, okay, and almost everyone participated in that the bull run, and then finally they dumped it all, and that was the beginning of the recession. Okay, very heavy selling, huge selling. Okay, so this is what they do, and they do it willingly. That is why we call them the market manipulators, because they manipulate. They are manipulating the stock market. They are manipulating the S&P 500 and the Dow Jones and the Nasdaq and you and me and everyone, right? So we need to stick to the technicals in order to avoid falling into the traps. And this is the same thing I tell to my community members. So I simply help them to avoid falling into the traps. Okay, so as of now, recently, because last 2 weeks, sorry, not the recent week, but the week before was extremely volatile. There was very heavy manipulation, very extremely heavy manipulation. Okay, so sometimes we can see, okay, this kind of manipulation, okay, that is there, particularly in the earnings season, and in the earnings season, particularly when the giants post their earnings. Okay, that is the time. So the last week, okay, this the last week to this the recent week. So the means a week before this the recent week. Okay, that was the week where when the giants have posted their earnings. Okay, and then there was this a very heavy manipulation. Now, okay, so that is the thing. Now earnings and the CPI data. Okay, now because see we have the elections on 8th Tuesday. See, on Monday there is nothing special. Then we have Tuesday, that is the election. Then on Wednesday nothing special. Then on Thursday we have the CPI. Now the market manipulators are aware of the fact that the Federal Reserve, okay, the Federal Reserve is extremely concerned about the inflation, okay, and the PCE data have confirmed, okay, it has confirmed that the inflation is not slowing down. Either it is going to hold, means on and around the 8.2, on and around, okay, or it will be more than 8.2. Anything above 8.2, it will be catastrophic for the stock market, for the S&P 500, for the Dow Jones, for the Nasdaq and their respective ETFs and all of the stock market, all of the stocks, not just for the US but for the global stock market. There will be a catastrophic, okay, this event if it will be more than 8.2. Remember, right? If it is like 8.1 or 8.15, okay, or just around, okay, this number, or 8, even 8, in that case, again, no relief, no relief. Okay. But if the CPI data, if the inflation comes out like 7, okay, 7 or 7.2, okay, or 7.5, in that case we can expect that yes, that the Federal Reserve, okay, these the Feds, they are raising the interest rates, and now we are seeing the impact of these the interest rate, that the inflation is now coming down. Okay, so from 8.2 to 7.5, okay, or anything like if there is a if the inflation comes down by 10%, okay, 5 to 10% a minimum, in that case it will be considered as a good news, not a, okay, not a very good news, but just a good news. Okay, in that case we can see that the S&P 500 and the entire stock market can further resume its okay, or not to resume, but it can go into this the bull trend, the short term bull trend. Okay, but most likely because the PC data was extremely strong, and it was saying that the inflation is moving up. Okay, this means that the data will be somewhere around 8.2, somewhere around 8.2 or more than 8.2. More than 8.2 means catastrophic, this event in the stock market. So elections, CPI data. Okay, and guys, once again, okay, if you are my YouTube community member, okay, that in that I will give you the daily analysis and I will tell you that what is happening. And because we are going to see the manipulation, okay, so again we need to be very careful. Okay, and we need to see that, or we need to think that why the manipulators are doing this. Okay, if there is a downward movement, then why? If there is an upward movement, then why? Okay, but so see, in general, okay, whether you are my YouTube community member or not, okay, in general, okay, as a trader, you must always ask a question that why, if something is happening in the stock market, then why that is happening? Why? What is the reason because of that? Okay, this thing is happening, because without reason, nothing can happen in the stock market. So either there will be speculation or there will be some technical reason, but there will be a reason. You need to understand, you need to know that why it is happening. Okay, let me tell you this one more interesting thing. So this interesting thing is related to this particular candle. Okay, this candle that was candle that was formed on what, on Friday. Now if you notice that open of the candle was 3737, sorry, 3767, and the closing of the candle was 3770. What is the difference? Only $3. Only $3 difference, okay, in the open and the closing price of this, okay, of this particular candle. So it's not a dozy candle, it's okay, and nor it's the hammer. It's just a small bearish candle, sorry, it's just a small bullish candle with a long tail. That's it. Now question is that if you ask the question that why this candle was formed, okay, why particularly, means why $3, why not more, or okay, why not up or below? Okay, so let me tell you this thing. So there was this the fourth update, sorry, this was the final update I gave to my YouTube community members. Okay, and I told them that while concluding the update, I saw that S&P 500 moved up back to 3750 levels, okay, which again technically was not supposed to happen because it came down earlier. But why this is happening? The only reason why they are trying, they means the market manipulator. The only reason why the market manipulators, okay, they are trying to move it back up, just to avoid the candle which can form as the point number 10. If that kind of candle is formed, then it will be catastrophic for the market. It will be catastrophic for the market. Now, what kind of candle? What is the point number 10? So point number 10 was, if the closing of the S&P 500 is in between 3766 and 3719, then it will form a kind of candle that signifies a reversal or the continuation of the bearish trend. Now, if you notice that candle would have formed, in that case, the technical traders, okay, the experienced trader, the technical trader, they would then come into this the short position, the short, okay, in this the short position, in this the bearish position, because that candle will simply signify now there will be a further downward this the movement. And what I mentioned, that we can also see or expect a gap down open on Monday, or irrespective of open, we can expect a downward movement. This is what I told to my YouTube community members even before the closing of the S&P 500. And this is how I help my YouTube community members. So I give them these the updates before, even before the things happen in the S&P 500 or in the stock market. They are aware of like what is happening. Okay, what is about to happen, what will happen, and if that is happening, then why it is happening, right? So the market manipulators, they simply try to avoid forming that kind of candle. That was the reason they closed. See, there is a manipulation technique that we call as the mark the close. What? Mark the close. Okay, in this case what happened is that the market movers, they willingly close the stock market or the stock or any index like S&P 500 or the Dow Jones or the Nasdaq. They willingly close, okay, to a particular level where they want it to be, because most of the time there are candles, okay, that form. So when the candle is formed, so the candle itself will get the first priority above all of the technicals. First the candle and then the technical. This is the sequence. Okay, this is how it works. So this is the well-known manipulation technique. Okay, and if you want to know about the technique, then you can search on in the Google, or I have made this the manipulation videos. Okay, so you can watch that. I think this is in the second part of the S&P 500 manipulation video. You can learn about the mark the close. They willingly close the stock market or this the S&P 500 to a level where they can achieve their goal. Now, in this case, by closing just above, barely above the open price, they have achieved their goal. And what was the goal? Now you can see that this is a green candle. Okay, this is a green candle. If the S&P 500 would have closed above all of the moving average, then we can clearly say, okay, that we are now okay up further. There's a bullish movement. Okay, so but again, now if you notice that this heavy movement, this heavy retrace, it came only and only in the last 30 minutes. Okay, before that, this was S&P 500. Okay, it was hovering around 3735 or below. Okay, then there was a very heavy retrace. Okay, again this heavy retrace was done in the Dow Jones, and in the S&P 500. Okay, we have seen that the impact of that the Dow Jones, but again they forgot to close the S&P 500 above these the moving averages. Okay, anyways, now what is going to happen? The first thing is that we need to wait for Monday. Okay, as of now we do not know that where will be the open. So the open will be defined by the pre-market trading. That will be there on Monday, means how the Asian and the European markets are trading, and accordingly this will be defined. Now what you are going to see? So you are going to see that if on Monday, if the S&P 500 closes above all of these the moving averages, then on Tuesday further we can see an upward movement. Then Wednesday further we can see an upward movement. Upward movement to what? Upward movement to what level? Upward movement to the zone of 3840. Upward movement to the zone of 3840. And if the speculation goes high, very high, okay, so will be the manipulation. In that case, it can reach 3840. It can move up to 3884. That was the previous. Okay, this is the number 3884. Okay, and then it can further move up to like to 3907. 3907 is the 50% of the fib retracement. It is the 50% of the fib retracement. 3907. Okay. So these are the levels we can expect. Okay, the S&P 500 to move in 3 days. So again, guys, remember the entire stock market. Okay, it has only 3 days. Okay, so, Monday, Tuesday, and Wednesday. Because on Thursday pre-market the CPI data will be out, and then the stock market will have to follow. The market manipulators have to follow. Okay, the rules of this the CPI data, right? Now. So this is the case. Now, if on Monday, if the closing remains below all of these, the moving averages, in that case, what will happen? In that case, the chances will be that it is going to further come down. Okay, but when it comes down, it is going to find very good support at 3675. This is something that I have repeatedly mentioned to my YouTube community members. Okay, in my recent updates, that whenever the S&P 500 comes down, it will find very good support at 3675. 3675. Okay, it is a strong support, right? So whenever it comes down, okay, this side it has the 3675 and then 3630. Okay, two things. Okay, these two of these the zones or the levels. Then it can see, okay, a reversal. On the upside, okay, it has the 3840. Then it will see a reversal, downward reversal, or 3884 or 3907, again a downward reversal. Okay, as of now I cannot clearly tell you, okay, that it will move up, and then after 4 hours it will come down, then this will happen, then this will come down, because this is the time of the election, speculation, manipulation. Okay. However, yes, okay, what we can do is that we can understand, okay, or we can predict the movement of the S&P 500 on the daily basis only. Okay, that if let's say there is some heavy movement in the first hour downward, okay, or the upward movement, then we can say, okay, that because there is this kind of movement, this kind of candle, this kind of technicals, okay, so for the entire day this is going to happen. Okay, or it can move into that particular direction. So again, if you are my YouTube community member, and if you have opted for all midweek updates, then I will tell you on the daily basis, okay, that how we are going to plan our trades, where the S&P 500 is expected to move up and down. Okay, from Thursday onwards, we will be back to the technicals because of the CPI data. Okay, we'll be back to the technicals, pure technicals, no more manipulation. Okay, so on Monday, manipulation will not be there. Okay, means just a little manipulation. Okay, but the manipulation it will be there on Tuesday and Wednesday. Okay, Tuesday and Wednesday, because the speculation will be high on Tuesday and Wednesday. So we need to look into, okay, these cases, okay, on the day by day basis, day to day basis. Again, guys, no matter what, just stick to the technicals, and you will see that 90% of the time you are making money, 10% of the time, okay, you are seeing losses. Means overall you are making money 70 to 80% net, 70 to 80% of the time. Okay, other thing is patience. You just need to keep patience. You just need to look for the opportunities. For example, this was the opportunity. This was the opportunity. Okay, for example, this was the opportunity to go bearish, right? So opportunities come. Now again, guys, if you are not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to get the daily analysis of the S&P 500, then I have given the link in the description of the video and also in the comment section. So you can visit the link, okay, and you can join my YouTube community to get the daily analysis of the S&P 500. This downward upward movement will be as is until 10th of November, that is Thursday. 10th of November, okay, 10th of November, the CPI data will be out on Thursday. Now, after the CPI data, the entire stock market, the S&P 500, now they will follow one direction only, either this direction or this direction. Most likely, the CPI data, okay, it will be around 8.2. Okay, this means that the stock market is expected to follow this direction. Now, you may want to ask this question, that if the data is around, let's say the data comes like 8.1, this and 8.1 is 0.1% less than the previous one, that it should be good. No, it will not be good, because the Fed chairman himself has confirmed that until and unless some significant reduction is seen, Feds are not going to pause the rate hikes. They are not going to low, and the 75 BPS we can see again and again. Okay, so 8.1 means that Feds will not change their decision. Feds will not change their mood, and again in the month of December they will go with, like, most likely again the 75 BPS back to back, fourth or the fifth time. Okay, so this means that the market manipulators, they know that 8.1 or 8, it is not going to help. Okay, 7.5, 7, okay, that is going to help. So we need to wait for this, the 10th. And again, if you are my YouTube community member, in that case I will tell you that what is happening, and once the CPI data is out, like 8:30 a.m. in the morning, then I will give you the pre-market update, and I will tell you, okay, that today means on Thursday, okay, what we are going to see, or what we are going to what we can expect from this the stock market, okay, on that the Thursday. So guys, once again, if you are not subscribed to the channel, then please subscribe the channel. And if you want to join my YouTube community, then I've given the link in the description of the video and also in the comment section. So guys, this was my S&P 500 technical analysis for the week of November 7th, 2022. That is from November 7th, Monday, to November 11th, Friday.